Good morning, traders. It's Monday, July the 14th, 2025. And as we step into the heart of summer, global commodity markets are navigating a fresh wave of geopolitical and macro risk. Let's break down what matters most for your book this week. Oil is starting this week with a modest uptick. WTI is at $68.55, up 0.14%. As the markets brace for President Trump's anticipated announcement on Russia and the prospect of new US sanctions. Last week's 2% rally was fueled by expectations of tighter supply, but the upside is capped by Saudi Arabia's reported overproduction and persistent demand concerns out of China. If you're trading crude, this is a week to actively manage optionality. Consider selling out of the money calls against core long positions to monetize implied volatility, and keep a close eye on the OPEC Plus quota dispute for any signs of a supply discipline breakdown. Gold and silver remain firm, supported by a robust safe haven flows as the US widens its trade war with the new 30% tariffs on Europe and Mexico, effective August the 1st. Gold is trading near 98,090 Indian rupees for every 10 grams, and silver just hit a 14-year high. Senior metals desks are rotating into physical delivery and rolling forward hedges, anticipating further price spikes if trade talks stall. If you're running a precious metals book, consider layering in calendar spreads and using physical premiums to capture dislocations between futures and spot markets, especially as silver's borrowing costs spike and the forward curve steepens. Grains are steady but cautious. Wheat opened at $5.54.5, corn at $3.99 and soybeans at $10.12.5 per bushel. Despite strong US exports, sentiment is bearish due to expectations of bumper yields and large South American supply. Managed money is staying nimble, using short-dated options to hedge weather risk and watching for any logistics snags as Mississippi River barge rates climb. If you're active in ags, don't just watch the weather. Monitor fertilizer and shipping costs closely, as Middle East instability is already pushing input prices higher and could squeeze margins for processors. Copper faces renewed tightness from tariff-related distortions, while aluminium is buoyed by macro tailwinds and bullish fund flows. Nickel, meanwhile, continues to struggle with oversupply. Leading desks are running relative value trades, long aluminium, short nickel, and using copper options to position for a potential squeeze if China demand surprises to upside. If you're in base metals, focus on cross-market correlations and be ready to pivot as new tariff details emerge. On the geopolitical front, the US has just announced those sweeping new tariffs on EU and Mexican imports, with the EU signaling possible countermeasures. Meanwhile, China is stepping up its military presence in the Middle East, adding a new layer of uncertainty to already volatile energy and metals flows. The best desks are stress testing their portfolios for cross-border risk and scenario mapping for sudden policy shifts. If you're trading oil, metals, or ags, stay nimble, use real-time risk tools, and be ready to pivot as headlines break. Our solution ENTRADE can help you here. It brings all of your trading, risk, and operations into one single platform, giving you real-time visibility and streamlined workflows, so that you can act with confidence and turn volatility into opportunity. If you'd like to learn more about ENTRADE, please feel free to reach out to me, and have a fantastic, good trading week.